When the federal government shut down this month, many economists predicted that the price of gold would rise. When it did not do so, many analysts began to question if the value of gold was being artificially manipulated. Many investors believe the price of gold is being held low through manipulation of the markets in order to keep investors away from the precious metal. How this affects the economy is yet to be seen. Gold has traditionally been a hedge against uncertainty for investors. When the market is left untouched, investors flock toward buying gold to protect themselves from market fluctuations. Dr. Murray Sabin is a professor of finance at Ramapo College of New Jersey. He has a doctorate in economic geography. He's also a forecaster, making predictions about the economy and politics. Over the years, many of these predictions have come true. Murray Sabin is our guest today. He's here to talk to us about the possible manipulation of gold prices as well as the future of the economy. Welcome back to the program, Murray.
Thank you, Gary. It's been a pleasure.
Now, Murray, what has been happening to the price of gold in relation to the government shutdown?
Well, the price of gold, as we all know, has been very volatile. It's had a huge run-up from the bottom in 2001 when it reached a low point of $250, ran up to $1,900 exactly 2 years ago. I think it was September 2011. And when a market runs from $250 to $1,900, you expect a correction as people take profits and other things happen in the marketplace. So now we've bottomed out at around $1,200. And we're now a little over $1,300. So the long-term prospects for gold is strong as long as the Fed keeps on printing money, which debases the currency, raises prices, and people looking for a safe haven to store some of their assets. So gold is something that everyone.
Where's the evidence? Where's the evidence that the prices are being manipulated?
Well, here's the interesting thing. Was it a week or so ago or 2 weeks ago? The price of gold dropped $25 in a few seconds in the futures market. And there seems to be indication that somebody sold a huge amount of contracts in order to get the price down for some odd reason. So
what volume of contracts need to be sold to make the price drop that much?
From what I read, it was about 2 million ounces worth of gold. I think it was that amount. I'm not quite sure. I don't have the figures in front of me. But that's a huge amount of contracts to be sold in a short period of time. And some big seller had to go in there. And who are the big sellers? They're either the central banks or governments.
So we don't know who that seller was. We don't know who dumped that gold into the market.
No, we don't. That's something that should be. That's something that could be maybe a Freedom of Information Act could be used in order to determine who is trying to who's in the market and making it possible for these prices to go down artificially.
So who would you go to investigate the sale? Where would you go to find that information? You mentioned Freedom of Information Act, but is there another place that you could go to take a look?
Well, this is something that people who are experts in the gold market, who are the traders in the COMEX, could go to the commodities exchange to find out where the selling originated from. And if it's the Federal Reserve, or we think it's the Federal Reserve, they should be have to disclose that information with the U.S. Treasury or any other central bank, because that's something that people need to know. The federal government is always complaining about manipulation in the stock market and other markets. So why don't we know what's happening in the currency and commodities market if they themselves are involved in manipulating the market by selling these contracts?
So, Murray, do you believe that method itself was used to manipulate the value of gold, or was it a legitimate sell-off?
Well, I don't think it's a legitimate sell-off. Why would somebody sell such a huge amount of contracts thinking that the price is going to collapse? Some people think the price is going to go down to $1,100, $1,000, even $900 an ounce, or even lower. And so if you really believe that, then that makes sense. But the point is, no one has been identified as a private seller, whether it's one of the big investment banking firms or some other, or a mining company that wants to hedge its output with by selling contracts now to lock in a price in order to sell their output at a lower price sometime in the future. So there are all sorts of possibilities of what could happen. It could be a benign thing, but it's very suspicious to say the least.
So if that was, in fact, if you believe that was suspicious, clearly you believe that, are there other methods that are used to manipulate the value of gold other than just dumping it into the market?
Well, there are probably all sorts of swap arrangements that the Federal Reserve has with other central banks, where they may sell gold one day and buy it back a few weeks or a few days later. They do that with government securities. Those are called repurchase agreements. they'll sell or buy, and then buy or sell the securities in order to affect interest rates. Now, we know the Federal Reserve manipulates interest rates. That's the Fed funds rate, because they control that through their open market operations. So we know the Fed is in the market manipulating a key indicator of the economy, the interest rate. And so it's not a stretch to conclude that the Fed would also be manipulating other aspects of the financial markets or the commodities market, namely gold and other assets.
Now, where would the price of gold be today if there was no price fixing?
That's a very good question. And I wrote an article several years ago. If we believe that the dollar should be as good as gold, we've all heard that expression over the years, because once the dollar was as good as gold, it was defined as originally 1/20th of an ounce of gold, then 1/35th of an ounce of gold, and then 1/42nd of an ounce of gold. But if we take all the dollars that are out there versus the gold stock that the Federal Reserve holds, the price of gold today should be close to $10,000 an ounce. That's not to say it will go there anytime soon, but if we are going to have sound money, namely a dollar that's backed by gold, then the price of gold, or I should say the dollar, will be worth 1/10,000th of an ounce of gold.
Now, the old saying is follow the money. Who's profiting from the manipulation of these gold prices?
Well, there's a rumor out there. I read about it a couple weeks ago that one of the reasons that the gold price has been manipulated down is so other central banks, namely the Russians and the Chinese, who have a lot of U.S. government securities on their books, would like to unload them for gold. And of course, if they went into the gold market and bought directly, that would drive up the price of gold by hundreds and hundreds of dollars literally overnight. So maybe there's a backroom deal between the Federal Reserve and the Chinese central bank, so they can unload some of their dollar holdings and U.S. government securities and buy gold at lower prices. Because remember, the Chinese have had experience with hyperinflation in the late 40s. That's what helped bring Mao Zedong into power.
Now, Murray, I don't want to get ahead of ourselves because I want to talk about the manipulation of gold prices as it relates to the world economy, but we are up upon a break right now. Stay tuned for more with Murray Sabrin right here on WHDT World News.